All right, what is going on, Discord family, and welcome back to another edition of Market Review. With me today is Tuesday, August 19th, Lord, and we'll be breaking down price action and reviewing my plan from ES, but we'll be breaking down price action on a couple different instruments today because there's a lot going on in the market today. So strap in. I'll try to make this quick as I do have to go get my child, and then you guys have any questions, don't hesitate to at me in the chat later. All right, so first things first, our plan was, or our macro plan, basically how I was viewing the market, was that this was a retrace of a bearish retrace of a bullish trend, right? We were chopping down, consolidating, and finally manipulated up and then expanded to the downside. Or if you're in a bullish trend, this is basically a manipulation down, right? So not the other way around. But anyway, this key level right here, 64, 53, 25, 50, or whatever it is, I said as long as we stayed above that level, we were bullish, which you can see every time we came close to that level that we buy up. So bullish above 64 to 53, and then bearish below 65.08, which is just the top of the range, right? We never came up that high. It's just where we were, right? Overnight, we broke the high of the PM session and then broke the low of the PM session, which means we created a new range, but it's still a very small range. To be bearish, I still want to see 64.53 break, which we did get. If not, bulls will look to reclaim this trend and target 65.02 back to the upside. To the downside, I want to look to target the in wall at 64.2450. You can see 64.2450 was right here. Here's the in wall. And what did the market do? It came right down to that level. And now we're trying to find buyers at this level. So as far as the macro view of the market, it was spot on. Once we broke 53, straight to 64.2450. Okay. Sorry, turn this off. All right, and then our range, right? Our overnight range that we were looking at. Remember, we broke the high of the PM session and we broke the low of the PM session. Therefore, we're no longer in chessboard high or low. We're in overnight chessboard high and low. Okay, so 64.7750 through 64.50 or 64.72.5 at the highs, and then at the lows, 64.62.5 through 64.53.75. Essentially, what I'm looking to do is I'm looking to long off the lows, which I took this trade, and I want to get short off the highs. I actually long the lows and got out at the high, and I was basically done. The rest of the time, I was just paper trading, right? So over here, if we came up to the extreme, then I wanted to short from the extreme, which we never really did. And then if we come to the extreme low, which we still might come to tonight or tomorrow, I want to look to get long at this 6-hour demand zone, targeting all of this up here, right? So ultimately, the pre-market plan worked out pretty decent, but let's go down to look at the price action. Again, if you don't read the pre-market plan, I strongly suggest you do, at least so you know kind of how I'm viewing the market, right? And just kind of compare it to how you see the market. And if you don't have a plan, there you go. You got a plan, right? So the keynote things to note inside of this overnight range is the fact that in between the range, there was also a new week opening gap. Now it was tiny, and we were talking about it today. It was tiny, but it was still doing its job, right? Anytime we got beneath it, shorts were good. Anytime we got above it, longs were good, right? But we understood we were in a downtrend structurally. So we're looking for aggressive buys above the in wall to look to short or look for continuation off the in wall, right? So what did we get? We traded down to start the open. I took these shorts from the open straight to these lows, got right out at previous day low. I was done for the day, okay? Didn't matter what price did after that. The rest was just repetitions, right? So once price got back up here, it reclaimed this level, and I took the market long in a paper trade, and I was targeting 64 or 65.02 because my thesis was that once we secured here, we made a last higher low, we were going to make that effort to go higher. I was wrong in that thesis, but I was right enough. I was right long enough to make money from the trade, right? So I got it long. It went all the way up here. And then as soon as we put these lower highs in, I got out at the 73s, right? The second I got out, the market just dumped. Like we just completely melted. And from that moment, I said, well, if I want to participate in shorts, I could look for lower highs off 64.53. And you can see as soon as the market dumped down below 53, it came back up. By this time, I was done because I tried to get out of here by 10. I got other shit to do. But you can see that that idea played out, right? We came right back to that key level after breaking through it, reclaimed it, or not reclaimed it. We got back underneath it and then started to come down to the 64.24 level, which is right off the pre-market plan, right? So when we came down here, I'm actually in a paper trade right now, practicing larger size, right? See what that feels like, see what that looks like. When we came down here, I was at the dentist's office and I'm like, okay, well, we're here at the end wall. We've met all of the objective. Well, I'm gonna go long down here. Why? Because this is the area. And where am I wrong? On my chart on my phone, my end wall ends somewhere down here. On the computer, it ends, it's like really small. So basically, I was trying to put my stop below the end wall, but on my phone, this end wall is much larger than this. I don't know why it's like this over here. But essentially, what am I targeting? I'm targeting these highs right here, right? And then ultimately, I'm targeting back up here because we met the entire objective for the day, right? But that's just, again, just practicing those repetitions. If you want to see yourself trading larger size, then you don't want to just start doing that on a funded account or doing it on a combine. Like, do it where it doesn't matter and see how you truly feel about it, right? Like, it matters to you mentally because you make it matter, right? If you trade in a prop firm account, what's the difference between a prop firm account and a paper trading account? The only difference is that you believe that it's real. That's the real only difference, because you can't take any of the money out for a minimum of whatever they tell you you can, right? So it's all a paper trading account. So why not use that same energy and get those repetitions where you don't get penalized mentally for it, right? So anyway, we got the rally up into the PM session. The only thing I'm waiting to see now is, will price stay below the 1 o'clock high? If it stays below the 1 o'clock high, then this selling is probably true and we're going lower. If these bulls rally these last 5 or 10 minutes and get back above this high, then we're going right back up tomorrow, right? So that's how I'm looking at price action for tonight going into tomorrow, but we'll see what it does. Tomorrow's a trending day, so either we put the low of the weekend today, or we put it in on Sunday, right? So we'll see what happens. Moving over to the NASDAQ, because I really like its setup from the day as well. We talked about this one really cleanly. Again, I didn't write a pre-market plan, but I definitely went over the NASDAQ very thoroughly, right? Very thoroughly. So inside of the NASDAQ, we talked about this channel that it was in. And I was like, hey, this is a falling wedge. And sometimes you get a push into the lows and then a blast off from the highs. But because we're bearish, right, on basically everything, and we got this break of structure here, then we might get the other falling wedge, which is the market just drops the floor, right? Drops the hammer. Things that led me to that thesis, when we come down and look at price, we had this beautiful downtrend, higher lows or lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows will equal lows and lower highs, equal lows and lower highs. Every time we came up to this perfect trend line, we dumped. And today was no different. And again, we talked about this before the market opened. So like, if you want to know kind of like my thesis, your best bet is just get here early, because I'm gonna be in here around the same time every day unless something comes up with my family, right? And I'm gonna tell you exactly about any instrument that you have, right? Any instrument you can think of. I said this morning, I said, hey, on the NASDAQ, it's built a little different. 550 price perfectly landed inside of the chessboard high. 750 gave 2 equal highs, right? Which meant that as long as we stayed below the daily fib, we were bearish. Doesn't mean you can't look for longs, because I'm pretty sure everybody in here took longs, but we knew where to get out. We knew that, hey man, this is good money, but not for a long time, right? So we ended up baptizing right off the open. Again, we took longs. I think Dez and Ziggy took longs from this level here and from this low here. Easy money, right back to the previous day low. You just got to be willing to take the profit right there. You load into contracts here, you get out right there, right back to the previous day low, right at fair value. And then if you really want to go double time, right when we break this, because I think this is basically what what Dez did. As soon as we broke this trend line, came back up and retested, he got short to 36s. And again, on its face in the moment, man, you shorten the low. But like I said, when he said that, I was like, yeah, it looks like the low right now. It's not going to be that in an hour, right? As soon as he took this trade, like, yeah, wow, don't try this at home and all that. But bro, this trade printed for 200 handles. Does it feel like the low now? No, because it wasn't. It was just the beginning, right? It was the break of trend. And what was the target? The target was the 1 hour fair value gap, which we also discussed in the pre-market plan. The pre-market plan, although I don't write one for all these other instruments, I go through all of them very thoroughly. And I point out, even in the charting sessions, right? Even, you know, the verbal pre-market plan, the written pre-market plan, all you got to do is put these levels on your chart, right? If you don't believe we be cooking in here, just go back and read the pre-market plans, right? If you got any problems making money, slow down, go read the plan, and then come holler at us, right? I'm telling you, we know where this market is going. We know what the probability is of the market going to certain places. Everybody in here that's been working hard, right? We're not psychic. We just know how price moves, right? So if you're struggling, please, I beg of you, read the freaking pre-market plan. It's not going to kill you. I promise you that. Moving over to RTY, and ask questions, right? Don't be afraid to ask questions. Like we try to pride ourselves on really, really giving a shit, because I do care. I definitely do. Same thing on RTY. Again, I called this wrong in real time. When we got this rally up on the 5 minute, my thought process was, you know, we rallied up, we're aggressively buying, everybody's pushing up, we're about to break these highs. Look for a break and retest off the chessboard high. Well, that was dumb, because if I wrote a pre-market plan, I ain't gonna say dumb, it was just incorrect, right? If I wrote a pre-market plan for this instrument, you know where I would be looking to go short? I'd be looking to go short right inside of this blue box. So why then would I be looking for longs at the high on a fair value gap? This is a false fair value gap. It is a facade. It is trying to take your money. And I you know, I almost talked somebody into going long right here, right? And the reality is this is a horrible trade. You should never take this trade, right? And that's my bad. But I'm human. I'm always going to make mistakes. That's why you should have a thesis on what you want to do at all times, right? So regardless of what I say, do what structure is telling you to do. And in this situation, if we come down to the 1 minute on RTY and we just follow the structure, right? All we're looking for is the last low that brought the high, right? We see these lows right here. They brought this aggressive manipulation, but then we dropped down and we created a lower high right there inside the macro. Once this low gets taken, because now this low brings this high, once this low gets taken, you look for a retest inside of 1025 to go short off the 1024 candle. 1037 usually brings the highest point of price from that level, and then we never come back to that level, just straight down from there. Bleed out all the way down to the previous day low. And I believe I stated before I left, I said, hey, if we get really bearish, look for retest off the previous day low. Bang, right there. 22.89.3. And you know, I talked about the target. I was talking with Timmy. I said the target is going to be twofold. First, they're going to target weekly fib. Then they're going to target the low ADR at 22.73, which they might get before the close. I said, and last but not least, they're going to target this 1 hour fair value gap at 22.63. Do I know which one they're going to hit? No, I have no clue. I'm just telling you what the probabilities are, right? Like that's the target if we're heading down. If we start coming down, we're going to that level, okay? Now let's move over to the Dow Jones, because it was absolutely insane, right? Look over here on the Dow, and RIP to everybody that was trading break and retest on this thing, because it played no games. It gave you the clean, smooth rally straight up. If you caught it off London, 6 a.m., you made bank. But if you then decided, I'm going to play this fair value gap right here, smoke, right? Then you said, okay, well, I'm going to play Hobbs's move, break and retest off the top of the chessboard, smoked, right? Then you turn around and say, I'm going to play longs off the chessboard low, smoked, right? Every which way the Dow was cooking. Ultimately, what you had to recognize was we were still in a downtrend. We broke the previous day low. Yes, we did find buyers off support, but as long as the market stayed below this high and this high, that is why we mark it as resistance, right? Then the market was going to try to trade back down. And you don't want to be in the way when a market is basically retracing to go lower, right? Do I think that they go lower? I'm not sure. This could just be a double bottom to go right back up. I'm not sure. All I do know is that this was a very dangerous instrument to play if you were bullish on it the rest of the day. So again, if I was writing a plan, this would have been the area that I would have looked at been bearish, right? But it's hard. I get it. Trust me when I tell you, I get it. It's hard to be bearish when the market starts off like this, right? For most people, right? I'm not gonna say it's difficult. You just have to believe that, hey, we're overextended. The ADR on this instrument is usually between 200 to 300 points. Yes, 400 points on this instrument, right? ADR is just the average range. You take the price range tool, you ain't even got to take it. It's on my chart already. Look at this. Like, this is how clean the Dow Jones is. Look at, you see that black line right there? It went from the low ADR to the high ADR back to the low ADR. Like, you don't get much cleaner than that. Like, I mean, that's literal textbook price action right there. Like, beautiful, no pullbacks. This was perfect price action. You just have to have all of the information before you go and trade it. Because I get it. I get it if you try to go short up on the way up and you try to go long on the way down. You just didn't recognize what price was doing and you didn't have all the data information. You wouldn't really know that we're oversold if you don't have the ADR. How would you know? I mean, we're overbought. You wouldn't know that. If you have the ADR and you understand, like, hey man, we just hit the average daily range by 10 o'clock. I'm about to short this damn thing. Could we go up another 400 points? Absolutely. But which one is more probable? Then we get this dump and you're like, you're short from up here. You put your stops here, you're just holding this thing, moving it down every stop, every stop, every stop. And it never would have stopped you out all day. So just a little heads up on the Dow, man. Be careful with it. It's a trending instrument. And sometimes when it goes into a range day like this, this is actually ridiculous. But at the same time, it was very, very clean. So, but yeah, so the last but not least, I did want to go over the volatility index because let me just pull it up. Actually, I can pull it up over here. The reason why is because I wanted to show you kind of what I saw out of the VIX that led me to believe, like, hey, it's only time to scout the shorts, right? Or the longs, right? The longs turned into scalps for me once I saw the VIX come down here and get above these highs, right? As soon as this candle printed and held these lows, this is like my go-to move when I'm trying to enter right here. When I see this candle come down like a gravestone doji and sweep and don't take out the doji, I already know what time it is. So when I saw the VIX do this, I said, up, time to get out of all long positions. It's about to go down, right? But now we're back into the low that brought, or the high that brought the low. So we're back into this level here. So if the VIX can't get back above, I believe there's an in wall right here too. Yeah, if the VIX can't get back above this in wall, it's going to come right back down and the uptrend is just going to continue. So we'll see what happens to close the day. But again, I'll be watching the VIX to basically give me confirmation on the long or short position size, right? Once it starts to expand or it starts to dump, it gives me a good idea of which way I really want to go with the market. So that's all I really wanted to go over. That being said, this is the market review. My name is T. Hobbs, and I'll catch you guys in the next one. Peace.